Hey there, everybody. Welcome back to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I am your host, Dr. Michael LoPiano. Wonderful to see you all once again. Happiest of Crash Fridays, I guess, here. Very interesting day. Very, very positive signs here with respect to that 2x NAV floor we've been talking about. We're going to break that down a little bit. Try to understand what's going on with the broader market right now, at least by looking at some of our metrics that we've been talking about. And what the company, what Ryan Cohen in particular, thinks this might mean for us going forward, as well as a potential third class of catalyst we might be looking at in the next couple weeks. So we're going to take a look at that today. We're going to talk about that in today's video while we break down, as well as, obviously look at our regular metrics and see what we can expect out of today's trading day. So first things first, we go to our gratitude. Once again, enjoying another cup of delicious Fervent coffee from Small Batch Roastery, Fervent Coffee out in Colorado, run by Keith and Tabitha. Many thanks, as always, for sending me some of these delicious beans that taste like blueberries. And gratitude as well to our sponsor today. Once again, Kurt Lusko, aka Short Fridays, bought the whole week, sponsored the whole week. Many thanks. As well as to our monthly contributors, Dat Scruffto, Ken Wedmerlin, and Not Medical Advice for offsetting some of my data expenses on a regular basis. Thank you very much. Thank you to everyone who has supported the channel and will be supporting the channel going forward. So a couple very, very exciting things yesterday. So first things first, Ryan Cohen, CEO of GameStop, for the first time in, a year and 9 months, so 21 months, has expanded his position in the company, this time through the filing of a 13D of exactly 500,000 shares. This is very good. We saw some of this likely reflected in our price action yesterday. So if we scroll down a bit here and take a look at our chart, right, we'll come back up here to some tin, always some lovely tin, right? Here's our market data. All right, so we had this. Here's our chart, our price action yesterday. So very, very flat day. We did move down a little bit. We traded for sizable portions of the day, just right on top of that 2x NAV floor, so notional asset value floor, as well as, right, this is book value, this is cash on hand, right? However you want it. If you value the business at zero, cash on hand, basically. Pre-offering. So importantly, what seems to, for some reason, the convertible note offering is not yet being priced in. So that cash is still not being treated as on hand for the company. But the pre-offering cash floor is rock solid there. So anytime we had little dips below it and then shot back up, and then little dips and then shot back up, and then little dip and then shot back up, right? So through basically the entirety of the morning session, that was very, very stable. Traded back up a little bit and then trade down, get right below it, and then kaboom. So what was this kaboom? This was, as I posted over on Twitter yesterday, I can try to pull up that tweet. Right, so we actually were able to see this if you were taking a look at, like you're over on Red Stripe Tie, something of the sort. Should be very close. Yeah, here we go. Right, so if you take a look, actually, you can see how these share orders, right? So here's Ryan Cohen's. These are likely a part of Ryan Cohen's acquisition here. They're right around his purchase prices. He came in, great purchase price, $21.55. Acquired, his 500,000 shares. They were broken up, so they came in throughout the day at various points throughout the day, and were sent over to the dark pool. So they were all sent over to the dark pool, but rather than, okay, you've heard me talk about this before, right? I've talked about this before. One thing that the equities market maker can do, if the equities market maker does not want to disrupt the flow of whatever is going on intraday, the equities market maker can route a particular order into the dark pool and then can fill the trade themselves. So they'll say like, yes, your trade has been filled. Here you go. Here's your shares. And then essentially do an FTD or a settlement thing later. They don't actually have to go out and purchase the shares right there and then, right? So the idea of the dark pool is you're supposed to be having an exchange between institutions that in fact do have settled shares, but the equities market maker can screw with that. So what it looks like occurred, what I think this move after hours in fact was, this was Ryan Cohen's order all being processed right here. So why did they decide to do that? Well, maybe they understood what was coming and decided, hey, let's not screw with this. That's as low as we're gonna get it. We're not really gonna make more than a few pennies maybe off of this. So we'll just go ahead and right. And it basically covered like it and ran up. So that was basically the midpoint. So Ryan Cohen acquired it, I guess. Yeah, so like right around here. So between the 100-minute and the 205-minute, the 205-minute and the 100-minute moving average right here. So in here somewhere. It's basically what his average price is. So that ends up being about the midpoint of this candle. Just about. Okay. So yes, so Ryan Cohen expanded his position and notably also put out 2 tweets yesterday. So his first one was, now we know why Buffett is sitting on 300 billion. I think it was maybe Paul Branham put this out there, said that now we know why GME, right, is sitting on 6 billion, right? So Ryan Cohen hinting at Gameshire Stopaway with his new investor relations website, saying he wants to, he declares a thumb war on Warren Buffett, right? These things in the past here. Right? He's indicated that this is what he wants his approach to be for the company. And with this last earnings report, we saw this directly outlined in GameStop's strategy, in GameStop's business strategy. The first pillar of GameStop's business strategy now going forward is not the retail business. It is not a collectibles business. That is secondary. What is primary is optimizing shareholder returns through investment. Now we have a retooling of the investor relations page. We have this convertible offering document titled Project Rocket. Ryan Cohen is doing Gameshire Stopaway. We talked about this. We talked about this in the live stream over the past couple of weeks. We talked about this. I talked about this in the earnings videos we did. Ryan Cohen is going for Gameshire Stopaway. That is it. The GameStop will become something like, well, maybe a more valuable brand or something than the original Berkshire Hathaway. I mean, Berkshire Hathaway now doesn't do textiles, right? They made shirts. That's what Berkshire Hathaway was. How many people even remember that? But Berkshire Hathaway, before Buffett acquired it, made shirts, textiles. So that's not what it's primarily known for. I think most people would be like, oh yeah, I guess real estate, because people see the Berkshire Hathaway real estate arm signs, outside home listings and things like that, for sale signs. But its primary returns are investment. That's what Ryan Cohen is going for. And he's making that not only known to us as investors, but also to institutions. Like, hey, I'm gonna hold on to this cash, right? And so we talked about this a bit. I said, look, okay, I've talked about this in videos as well. Yeah, look, Ryan Cohen can go ahead and buy Bitcoin right now and use that as a hedge against SPY. But he may also be declaring this intention ahead of time so that maybe it results in Bitcoin being shorted. If it gets shorted, hey, that makes it cheaper for him and Saylor, down the road to go pick up Bitcoin on the cheap. But he doesn't, okay, maybe he says he has the intention to buy, but he doesn't have to do that now. He can just sit on this cash and wait for the price to be even better, especially based on what we've seen. Gosh, I've said this, right? If I can see, right, I can see the SPY falling apart under these momentum indicators, like this guy absolutely knows that, right? He's been able to spot this way out in advance. So we get this bit, and we get tariffs are turning me into a dem. We get this rainbow flag, and this I think this is also Paul Branham who suggested this. This lines up with the Rainbow Road video by Roaring Kitty going back into March of 2023. So this was posted immediately following quarter 4 earnings from 2020 all the way back in 2021. And this resulted in, right, so if we go and we look at our chart, always time for some charts. We'll look at SPY doing its thing here. Yeah. But let's see. So that was here. That was here. In fact, this low here down to 29. Let's see, what's the low? It was 29.23 on that. Let's say, yeah, that was the week of Monday, March 22nd. So yeah, he posted this. That was the low. Was 29.23. Essentially, right when he posted that tweet, and then GameStop shot back up in March. That was our sort of second March bounce there. Traded down a little bit, down all the way to April 13th. Came down for a second low, but this time only down to 33.80. And then that's when it ran its huge move, its third really big move up to $75 in June of 2021. So I would not be surprised if what Ryan Cohen is suggesting here with this tweet is, what did we just get? We're in here, right? This is it. We're kind of double bottoming in here now. 23, right? We did actually get a kind of an initial low in the lower 21s just prior to earnings. We had a big sell-off after earnings. We went down even lower. So we're probably in this. And what he might be suggesting is that we're looking at this for June. This may be perhaps the move that's suggested. Did he? I don't actually remember if he bought in March, but something like this. Something like this. So that would basically line up, right? In the sense that we've already talked about potential swap catalysts coming up in the middle of April, especially following or as a result of this sort of April 14th to April 17th concentration of swaps that we've seen. Metro Ballins pointed these out. We'll spend some more time. I mean, I personally will spend some more time trying to figure out what's going on with these over the next couple of weeks. We also have potential FTD stuff, right? So, right, FTDs that were incurred way back in here. Let's bump down to the daily. It's a little bit more visible. Yeah, so, you know, we have, yesterday we talked about, we have many cat, we have billions and billions of cat errors. We have XRT on Reg Show. We have GameStops. Oh man, look at it. Look at how tight this guy's getting. All right, here's our momentum indicator. Getting very, very tight, very, very close. As soon as we get this cross, we're going to start moving back to the upside. We have a lot of FTD. So we have potentially FTD settlement and sort of buying to close or buying to cut, buy to settle ETF FTDs. We have potential swap catalysts. And now with what we have going on in SPY, we might also be looking at some margin call catalysts, right? So as institutions are exposed to this volatility in the broader market, while this is realizing, there's going to be some positions that are blown out, and this is going to result in some margin calls. To what extent will this result in the liquidation of, say, swap hedges that involve, GameStop swap hedges, or legacy short positions that are synthetically bound up or rehypothecated otherwise? This is a lot of early DD used to talk about this, right? The idea, people suggested this with the market crash. This is sort of the GameStop moons when market crashes theory, because of the rolling margin calls. So this is, I think this is probably, you could qualify this as a crash at this point. Maybe it's not crazy, but it's definitely, I mean, we're moving into bear market land. We're definitely in bear market land here. So actually, let's do our weekly here on SPY. So, right, we talked about this several weeks ago. Where's SPY going, right? Bump down here to about 515, just right on top of, actually just north, right? Just north of the 100-week moving average. Just north, few dollars north. And then maybe, we seem to have got a little bit of a bounce. Maybe we kind of go back up here into the 530s, 540s. Maybe we get a bigger bounce, but maybe we just kind of find our way. I think basically what this is pointing at, based on what we're seeing here in our momentum indicator, man, we are just getting started. We are just getting started looking at our 55. So if we're looking at Roaring Kitty's indicator here, look, we are just starting to move down on the 55 average, the 55-week average. Just starting. Okay? Couple weeks of very, very slow decline here in our PMO, right? In our 55 moving average. Obviously, right, if we go back to 2023, 2022, right? Like we're basically, well, we're a bit farther. Actually, 2022, early 22 was a little bit farther along than we are right now. But we're like kind of what here? Yeah, essentially. We're kind of in the mid-January bit momentum-wise of 2022. Yeah. So we're really just getting started. We're really just getting started. And I would not expect even a consideration of reversal back to the upside. I mean, again, like a little hitchback here, but I think this broader trend is basically going to continue until we get down to that 200-week moving average. Based on how profound a loss of momentum this is, I think that's going to be the case. I would not be surprised to see equities lose all the way down to the 200-week moving average. Why? That's what we did in 2022, 2023. We only kind of finally reversed here. There was some indecision, but we only reversed in the 2022, 2023 bear market once we got down to that weekly moving average, which was down around 357. Right, actually the low, it dipped below it just a little bit to 340. Actually, what was the low? 348. 348. So, I mean, higher low this time, but I don't see how many weeks is that going to be? 1, 2, 3, 4, 5, 6, 7. Oh, we could, I mean, we could just go straight there. 7 weeks the whole time. Man, I mean, talk about margin calls if we do that for 7 straight weeks, man. But okay, could we possibly do that? What do we think about the options market? Do we see anything like that in our data for the options market? Well, pretty much, actually, totally, yeah. So we reversed here, right? Partially, why did we reverse around 515? Well, okay, we got that technical mark, but partially, that's it. Like we realized the volatility. Yeah, we hit this last kind of stop here, but like this is the vast majority of all of our gamma positions. And look, that 550 mark, way up there. Look at this. Like there just isn't the same amount of GEX below us. It's very weak. We don't have any big positions really. 510, 505. I mean, there is put GEX there, but that's it. We realized most of the GEX that was on the board. So time to, I guess, start taking profits on puts and then walking us back north or closing out hedges or something like that, right? So I wouldn't be surprised to see a little bit of a hitchback here, which we are seeing pre-market, but there is no reason to expect that we're going to stop moving down. Okay, so it's just put GEX dominant positions as far as the eye can see, and I pointed this out yesterday. There is not a single one, right? We just had these added, the 9th of May and the 23rd of May. Are about even because there hasn't been enough time to open positions there, but every single one out through June 30th, every single one, actually, and looking here too, every single one out even through 2027 is put dominant. So everybody right now and their mother is positioned to capture a downside move. VIX, right, spiking up over 30 to what did it go to? 30. It's currently at 37.4. So yeah, dogs, we're going down, right? Like it's going down. This is what we've been waiting for. This really, truly might be the type of move that does bring about, right? Based on GME's positioning, this might be the type of move that can bring about some of those rolling margin calls that can prop up GameStop. And GameStop is the type of company now, based on its cash position, that looks like something of a reserve asset. Yeah. In fact, what do they have? They have treasuries. That's what GameStop has its money in, is treasuries. And treasuries give a risk-free rate of return versus whatever the heck the market is doing right now, which seems a risk-free rate of loss, just max risk, something like that. So yeah, so what are we looking at today? Well, this is a little, actually, we can take a look at our 1-day chart here. Over in GME, we're getting pretty close. Oh, we just opened. How's GME doing? Oh, a little big volume on the open there. Very cool. Oh, that's nice and zoom in. So looking pretty not bad. We're back up, basically opened. Where's our open today? 2141. So yeah, we're clustered right around Ryan Cohen's entry price here. Not bad. Not bad. A little spooky in terms of, maybe, oh no, we see this 2050 value. As I think I mentioned this, right? I tweeted that, or I either tweeted this or I just messaged this to some people. But this looked like not actually GME dumping. Like this looked like a short to make it look like it was dumping, right? Because we just moved right back as almost as much as we took off in the pre-market and overnight. We just worked our way back. So SPY has not recovered all the way. SPY is deeply in the red. We gapped down. GameStop just worked its way back here. And in fact, if we go ahead and look at our shares available to borrow, look at that. We're back down to 950,000 immediately upon open there. So what's going on with these shares? Are these being used to short GameStop to make it look like the price is being pushed down or it's selling off with the rest of the market to try and get some unsuspecting or panicky buyers to separate from some of their shares? GameStop does not appear to be affected in any of the same ways that SPY is right now. And certainly this is even, it continues to be undervalued insofar as all of this cash that has been acquired by the company as a result of the convertible notes offering has not been, is not priced in. It's not priced in yet, which is incredible. So very interesting to see how this develops. Very interesting to keep our eyes on cost to borrow numbers. What are we looking at in terms of GameStop options? Well, again, right, despite this this deep redness here in our broader market, GameStop options not looking too bad. So puts coming off the board, out of the money calls coming off the board. Short term, very short term, couple of some bullish trades, some bullish options positions opened here, long calls between 21.5 and 22.5, trying to bet on that. The huge amount of calls that are out of the money right now. A little bit of a reversal. Next week, somebody opened an $18 put position long. Hope you lose, dude. Yeah, I don't think so, right? I keep talking about this 2x book value and this 2x notional asset value. I mean, again, we seem to be sticking to this pre-market value. It's just so sticky. It's working like a magnet. Every time we dip below it, we just shoot right back above that floor. And that's what we did. That's what we did pre-market here. Options wise for next week, we do have short calls at 23.5. Again, I would say our GEX ratio is actually down, which is bullish, right? So it's shifted in terms of call GEX. 21.50 in terms of GEX is up as a call GEX dominant position. A lot of traders opened long calls there yesterday. So Max Payne pretty much consistent. It is down to 22.50 for this week. So again, unless something crazy happens today, I'm not expecting that we have anything more exciting than a kind of a Max Payne-ish finish. Max Payne values haven't shifted too much heading into the rest of April. We can see if that's changed since Chart Exchange always updates that after market open. It's down a little bit. So 22.50 for this week, 22.50 for next week. April 17th now down to 23. Very large amounts of calls. So I wouldn't be surprised. Honestly, I wouldn't be surprised if we hung out basically in this range through April OPEX. A lot of this is going to be dependent on some of these catalysts. So on FTD covering, on or settlement, I should say, on whatever is going on with these mid-April swaps on Chewy, I suppose, and which are marked with GME prices from 2021. And what is potentially going on or what could be going on with margin calls now that GameStop is now that the market is tanking here. So yeah, we can take a look at our GEX. Right, a lot of positive GEX territory here. If we can kind of stable out and recover, if what I think is going on, right? I think some of this downside we're seeing in GameStop is shorting. I think it's direct shorting to try to keep the price from moving into this territory, to try to keep some of the price up related to the offering from being discovered. Well, yeah, price discovery from happening as a result of this cash position amid the current circumstances. So yeah, right, we're hanging out kind of just around here. Like I said yesterday, I think we still kind of have this groove between 23 and 23,350. So if we do start to move up, I think, and we get over this hump at 22, then I think we just kind of just trade in this groove and hang out there. But for now, it looks like whoever is using these shares to directly short the stock is kind of keeping us below 22, using this as kind of a mid-range overhead, and then keeping us kind of trading in the 21, 22 area. So is that necessarily the options market maker? I don't think so. I won't speculate too much on that, but things are certainly looking up. Waiting on these catalysts we'll be putting on. Yeah, we can talk through some of this on today's live stream. So today I'm actually I'm catching a flight, so we will not be doing our live stream at 4. We'll be doing it at 5 p.m. Eastern time today. So I will post a link and an announcement to remind us all of that. But in the meantime, we get to enjoy this remarkable GameStop buoyancy, sitting on this gigantic cash position that the company has not revealed has been invested in anything except treasuries right now, waiting on the price discovery for all of this cash to actually reflect itself. In whatever's going on with prices, and seeing what's going to happen with some of these catalysts. If we're interpreting the signs correctly, then we could be in for another 2021 rainbow road from March to June, which does more or less line up with what we're seeing in the swap data, or yes, more or less, right? So mid-April run to June, right? So a price up occurring in that range once those April swaps are out of the way, and culminating in the arrival of those June swaps, which is our next major concentration of GameStop and / Chewy swaps, right? We have some on both dates. Yeah, so that's gonna conclude it for today. Good luck out there, everybody. Hope you enjoy this continued unfolding of Tariff Day. We'll look forward to seeing you at 5 p.m. Eastern time tonight on our live stream. We'll talk through some of this and more, and enjoy some conviviality heading into this first April weekend. So thanks very much. We'll see you tonight.